Welcome back to Nasdaq Trade Talks. I'm your host, Joe Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live from the 85th Annual STA Market Structure Conference in D.C. Joining me for this segment is Jake Rappaport. He's the head of capital markets over INTL, FCStone. Jake, it's great to have you on set with me. We're talking about ADRs. It's not a topic we frequently focus on. So tell us about ADRs and why traders would want to participate in them.
Yeah, well, I mean, ADRs have been something that have always been a great way for U.S. investors, or really global investors, to get a diverse investment globally. Whether it's a pension fund that has a limited amount they can invest in, whether local currency in U.S., then those U.S. funds can be deployed to get ADRs and get more exposure globally.
How complex are ADRs? Because, I mean, you're looking at a global platform here.
Yeah, I mean, the underlying network, you definitely need a global network to get access to those ADRs and bring those back home. But for us at INTL, we try and make that easier for investors, where we can give global liquidity during U.S. hours. So for us, it's a great way for investors to get access to those global markets when that local market's not open, and have the ability to hedge or get liquidity throughout the day.
You know, it's really interesting that you bring up liquidity, because that seems to be the key topic at STA this year and every year. But something's interesting. Bank of America Merrill Lynch, they are blocking low-price securities. What does that mean? How does that impact traders?
Yeah, I mean, look, it's definitely a regulatory push right now. There's no secret. I don't think BAML will be the last to ban that. But ultimately, it's our responsibility, or the regulator's responsibility, to think about the retail investor.
Right.
And that in that low price category, there are Australian miners, Hong Kong stocks, there are global stocks that trade sub $5 that are legitimate companies.
Right.
So I think for us, we need to sift through that and find legitimate companies and weed out the nefarious actors. And that's going to take more people than just the regulator.
And what happens if you can't trade them? You have to be able to trade them somewhere on some kind of venue.
Yeah, absolutely. There's going to be a bottleneck unless we come up with a solution.
All right, and to wrap it up here, are you seeing OTC ADR volumes trading higher at this point?
In the over-the-counter space, I think year over year, it's about 54% ADR trading. A lot of that was driven by Tencent Holdings, which is about a quarter of the volume. But a credit to the over-the-counter market that there's an efficient place for that to trade, where maybe 5 years ago Tencent couldn't trade over the counter.
Right.
And now there's sufficient liquidity, it's efficient, and